Welcome, ladies and gentlemen. In this video I would like to show you that it is possible to create your own expert advisor, your own automated trading system. Now let me say straight away, it is a very complex, very difficult endeavor, but if you really are serious about it and you're willing to invest a few years into creating your own strategy, then basically it will be possible if you keep on working on it and you improve it and you make sure that your tests are representative, that you test on tick data, etc. So let me also say that I'm not selling this strategy in any way, so the only purpose is really to show you that it's possible to create good EAs which are robust and which are able to perform over different market periods, market conditions. So what I will do here is I will start a tick data backtest under realistic conditions. Then I will stop the video and then I will show you the results of the backtest for this particular strategy. So allow me to give you a bit more information with regard to this particular strategy. I should say that this is a short-term EA, but it's not based on any martingale. It's not based on any pyramiding. It's not based on hedging. It's not based on high frequency trading. I should also say that it always places a stop. That it has an auto lot function, so it calculates the optimal leverage for a defined risk per trade. In percentages. So this particular backtest runs on a $100,000 account. The maximum risk per trade was set at 1%. As you will see, on average this system places around 1 trade or 2 trades per day. That means on some days it doesn't trade, on other days it places 3-4 trades. It's not normally distributed. So I think this gives you a good idea how the strategy was set up. It's basically like a sniping automated approach, where the A doesn't place a high number of trades, but rather has a lot of conditions that need to be fulfilled in order to place a trade. So there is a high number of filters. But I will not show the details in this video. All I can say is that a number of complex mathematical filters are part of the EA. So only if certain conditions are met, then trades will be placed. I should also say that it has a trading rule, so the stop, once the trade goes in the EA's favor, the EA tries to protect the profit. And people who have tested and experimented will know that, especially when you trade in the short term, like on a 5-minute chart, like here, it's quite complex to find a good trailing rule whereby you don't get stopped out too often. Because if you trail too tightly, then you may get stopped out on a lot of trades, which is not desirable, of course. Yes, I should say that also I included a trade counter So once a certain number of trades is open, the A doesn't add additional trades, and there's a whole range of other factors such as a spread filter, a time and day filter, and so on and so on. Last but not least, I should also say that it's quite unlikely that you will find a good robust strategy just based on standard indicators. I mean, if you do a lot of testing, you will see yourself that if you really want to have a strategy which is robust over different market conditions, this is basically ambitious, and you need to have like some more complex components for the A, which allows it to do okay over different conditions. Now, no matter what strategy you run, you will see that there are always phases where the strategy does better, for example over 3-4 months, and then there can be phases where it goes flat or goes down, or there is a drawdown. It's part of the game. However, if you have a strategy which over, let's say, a multi-year backtest on tick data, such as, let's say, 5-6 years, seems to be quite robust, that's a good indication that you found something that could potentially outperform. Of course, it's never guaranteed that even if you found a good strategy that it will always be profitable. Strategies can die in the future, and markets as such can change, of course. But if you didn't do the testing and you didn't optimize your strategy to the point where at least the backtest shows that it's a potentially good strategy, then it's highly likely that the strategy isn't even good enough to go live. Okay, so basically let me summarize once more. I personally do not believe in buying any commercial stress systems. I would recommend that you try to create your own, that you really understand it bottom up, that you put in the work that is required, that you do all the necessary steps like tick data backtesting, variable spread, that you incorporate transaction costs, that you let it run over a long time period, and this normally takes at least a few days if you have proper tick data. And I personally believe that you shouldn't even consider to go live if you didn't even succeed in showing a nice account curve in your tick data backtests. This is like the basis for launching any like live trading activities on the automated side. So yeah, in a nutshell, yes, creating an automated system is highly complex. You need to invest a high number of hours, and you will also learn a lot along the way, which is why I really recommend you to get into the habit of backtesting strategies on tick data, because you will see why so many traders fail. Also, you will see why some manual traders have the illusion of having a good system, just to realize that actually the system is not profitable at all. And on a last note, I should also say that because of all the market manipulation going on these days, the time period on average during which the market conditions are changed, such as the average range, has become shorter and shorter over the last years. So for example, you can see it in your backtest data. Let's say 5 years ago you would be able to create standard strategies that would perform okay over, let's say, a year or 1.5 years. Then this time period went down to half a year, then this time period went down to something like 3-4 months. So if you take a standard strategy, and even if it's well programmed and it has some reasonable risk management rules and some filters, you will see that even if it does well over, let's say, 3-4 months, it's a high likelihood it completely dies off thereafter. And I mean like that after that the account curve would completely drop. Okay, so the system would lose money and completely blow up the account at some point. But the main message here is it possible? Yes, it is possible. if you really, do your homework and you invest the necessary hours, then, there will be a light at the end of the tunnel. And the whole point of this video is to prove that, yes, there are strategies also in the short term which can be profitable over different time periods, different market conditions. Anyways, I stop the video now, and once this backtest has progressed, I will continue. Okay, so this backtest covered around 75 trades, and as you can see, they had a great run, phenomenal performance, around 39% just over a few months. I mean, this would beat the yearly performance of some of the best big hedge fund managers. They have a good year in their eyes if they do make like 20%. And as you can see, I mean, 1% per trade risk is not super conservative neither, that should be said in all fairness. So yeah, this is a good result. Okay, so let's look at the numbers. As you can see, maximal drawdown 5.72%, total return above 39%. Win-loss ratio not very high, you see, 44%, below 50%. But as you can see, average profit trade 2,679 and average loser 1,171. This is what makes this system so great. Also important, maximal consecutive wins and losses, you see, 4 on the losing side. Relative drawdown, so 6.3%. That's great relationship between return and drawdown. Profit factor 1.8, expected payoff 522. That's very high. Okay, so that was a good run, of course. Now I'm trying to find a time period during which, the EA didn't have such a nice run. So I'm looking for a time period where it rather struggled. And I'll stop the video now and continue once the test has been run on the more challenging time period. Okay, so I let the strategy run over around 50 trades. So I found this time period here, which was a bit more challenging as compared to the one before. So let's look at the numbers.
Some data for New Zealand, February Trumpometer Heavy Index 0.4% led.
Okay, so 52 trades, 4.8% return, maximal drawdown 10%, average profit 1,255, average loss 950. So yeah, so the performance over this period was definitely not as good as when it had a good run. However, still the system didn't die down or had a super long drawdown either. So that's a good sign. So this is what you have to do if you want to develop an automated trading system. You have to test it over all these different kinds of periods. and then in the end you should really let it run over multiple years on tick data, which normally takes a few days. And once you know, like, the overall account curve looks good, for example, it has a good run, and then, you know, it has like reasonable drawdowns, then you are on the right way. So what you can see here regarding the system I showed, so first it had a really fantastic run, made like more than 30%, and then on the other period I showed, it kind of went down, went flat, and at some point it came back up. So many people that don't understand that, you know, so you have to differentiate those different periods. So the first run was really good, and the other run was definitely not as nearly as good. But what matters in the end is like the equity curve overall. Yes, so all systems will have different kind of phases, and in foreign exchange, in the short term, if you manage to create a system that under realistic conditions, I can't emphasize that enough, overall has a good account curve, like for example this system here, then, you know, this looks very promising. If the drawdowns are not too long and not too deep, and eventually the system just catches up and goes for the next run, this is basically what you want. Yeah. But it's definitely not an easy endeavor, as I said before. I mean, in order to achieve a curve like this here, I mean, normally it will take you a few years to develop something like this. It needs to be really thought through. It will probably have a few thousand lines of code. You need to understand exactly how it works, all the components of the system, what its strengths are, what its weaknesses are. And as I said before, I mean, most likely the system will not be composed of, you know, standard indicators like moving averages or whatever. Most likely there will be not only complex mathematical filters, but there will also be components. I mean, some people do machine learning, others have their own secret sauce. There will be a component which is, let's say, non-conventional. You know, all conventional systems, even if they perform over one period, yeah, they will eventually die, and that means like not only go down, but completely go down. And you will see that once you work on creating a system and you test different approaches. Okay, I think that was a good demonstration, and I think this shows you like you know, what kind of topics we talk about. But you know, as I said in the beginning, it is possible. You know, even if it will take you a high number of hours until you get it right, yes, it is possible to create a profitable, robust, fully automated trading system in the foreign exchange markets in the short term, which does not make use of any martingale or pyramiding or grid trading or hedging or all these, or high frequency, all these things which eventually blow up. Yeah, you have to be careful, because for example, if they're like commercial systems, you know, they show you a nice curve over a selected time period and you think, oh great, you know, that's the one. What they don't show you is, you know, eventually it does kaboom. It loads it up. For example, if it's a martingale based system, it eventually loads up too many positions, and then it just needs one trade to go wrong to completely blow up. And that's really the one thing you want to avoid. Okay, you want to have something which is robust, solid, and not based on any kind of martingale approach. I mean, this is very, very important. And if you take this as a filter, you will see that you can't really find such a good system anymore for sale. So you're better off just developing it yourself. Because obviously the ones who went through the process of creating such systems, I mean, they have no interest in giving this to somebody else to sell it, because if too many traders may use it, it eventually, you know, may actually die, because then this will be visible to money groups, and you know, it's not that even though the market in FX is very liquid and deep, it doesn't mean that you can just, you know, place unlimited lots. Definitely not. So I may, in the future, maybe I do other videos on more specific topics, such as improving a system, creating a system, and so on. But all I want to show for now is that it's actually possible. All the best.